Hello everyone and welcome to this 100% English session of CA Final Foreign Trade Policy, a topic which maximum students think of skipping in examination, which is your biggest mistake if you're thinking to do so, because I will only take your 1 to 1.5 hour in 1x speed. So whenever you see this video once and later on during your exams, if you refer it even at 1.5x speed, you only require 40 to 45 minutes to finish up entire foreign trade policy. This topic in ICAI module is given for 50 to 60 pages, which we have summarized only in 11 pages. So almost only 15% pages of the module and we complete the entire chapter. The notes of foreign trade policy are already shared on Telegram channel, link of which is given in the description box. Even if you have version 4 of the notes, which are the latest version for November 24 examinations, still you will have to download the new notes that I have shared on Telegram channel. The notes that you have in your book will 90% match with this, but I have made some changes after version 4 and this new foreign trade policy already shared on Telegram channel. So please make sure you download and take the printout of those 10 pages. Chalo. Ready everyone with me? We are live, audio, video, everything great. Shall we start with the class? Yes, pay full attention here and your FTP problem will be solved. See, this portion anyways comes in examination for a maximum weightage of 5 marks. If MCQ comes, might be for 1 or 2 marks. If a theory question comes, might be for 4 or 5 marks. So only for a weightage of 5 marks, we are studying this entire topic. You should definitely not skip it. I will cover each and every portion which is relevant for your examination. Once you attend this class, just go through the notes once, go through the question bank once, you will get an idea of how pure theory questions are being asked and you will be 100% confident with the chapter. Done. Chal. So let us start with Foreign Trade Policy 2023. Now, foreign trade policy. The name itself suggests that it is a policy, basically guidelines, instructions which are issued for foreign trade. A policy which is issued for foreign trade. Policy of what? Policy consisting of guidelines, instructions which is issued for foreign trade. Ma'am, what is foreign trade? Trade that you do with the foreign countries. Basically, either you can import or you can export. Now, foreign trade policies were issued for a period of 5 years, a block of 5 years. So, the last foreign trade policy before this was FTP 2015-20. Then because of COVID, it was extended till 2021, 22, then 23 and then from 1st April 2023, this foreign trade policy is now applicable. Also understand, if you are appearing for November 24 exams, May 25 exams, November 25 exams, any exam May 24 onwards, this is the only FTP which is applicable for your examination. Okay, ma'am. So what is FTP? A set of guidelines instructions issued by central government in matters related to foreign trade. This could be a question asking you, what is the goal of FTP? What is the purpose of FTP? What is the aim of FTP? Why is government coming up with foreign trade policy? Ma'am, to develop and promote foreign trade, of course. The name of policy itself says it is a policy for foreign trade. So, we obviously want to develop and promote foreign trade. Why, ma'am? Because if you do business within your family only, you sell goods to your brother sells goods to your mother sells goods to your fathers, of course, none of you may individually become rich, but as a family, you can never grow because all transactions are going on within the family only. If you want to grow as a family, of course, you will have to sell the goods or services outside of your family. You will have to earn from people outside of your family. So, you think of the India country as a family. So, of course, if we engage in trade with people who are outside India, we can bring technology from them, we can bring infrastructure, we can sell our goods and services, we can earn foreign exchange, and of course collectively we can all grow. So we want to develop and promote foreign trade. But nothing in excess is good, of course. If we start importing too much, ultimately our forex reserves will reduce. Also, the domestic industries will face a lot of issues, competition, and their sales might also get affected. Why? Because they will have to face severe competition coming from outside India. So, too much import, of course, not good. Too much export also not good. Why, ma'am? Because then whatever you are making, you are exporting. We might have scarcity domestically because at least we need to satisfy our demands. No, then we can supply the goods which are in excess to another countries. So promoting doesn't mean you promote it rampantly. We also have to regulate it, that it should be okay. We should promote. Import export should grow, but should not grow beyond this limit. So there is also a requirement to regulate import and export. And ultimately, when you import something, of course you need to pay. So the forex reserves go down. But when you export something, you earn forex. Now, whatever you earn minus whatever you pay is known as balance of payment. And ultimately, what we are aiming for is a favorable balance of payment for India. What we are aiming for is a favorable balance of payment for India. That ultimately we want our exports to be more than imports. Basically, we want the forex to come in more than the forex that we are paying to the foreign countries. Okay, ma'am. Which is the legislation governing the foreign trade policy? It is the Foreign Trade Development and Regulation Act 1992. Now we know in 1991, there were privatization, globalization, liberalization implemented in India. A result of that only, in 1992, we had foreign trade policy being implemented in India. Which is the ministry concerned with foreign trade policy? As we said, government, but which particular ministry of government? So Ministry of Commerce and Industry is the concerned ministry for foreign trade policy, which has an attached office to it of Directorate General of Foreign Trade Organization, which is headed by DGFT. Ma'am, who is DGFT? Directorate General of Foreign Trade, an IAS officer. Now, this DGFT has regional offices in India at multiple places, but the headquarters of DGFT are located at Delhi. So the main office, the headquarter of DGFT is at Delhi, where the FTP is formulated, controlled, supervised, all the major operations carried out from there. Could be asked in MCQ. Now, this can also be a possible question, that write a short note on DGFT or explain the roles of DGFT. So it is very simple. The most important thing that DGFT is required to do is to formulate the FTP, to make the FTP. That what are we aiming? How much we want to increase the exports, how much we want to increase the imports, what we want to basically do with the balance of payment, what should be the provisions, everything. So the formulation of FTP is the role of DGFT. Now, if you formulate, you also need to control and you also need to supervise whether it is being properly implemented or not. Issue authorization for import and export. Today, if I want to start start importing or exporting something, of course, I cannot directly do so. No, I have to take some authorization that I want to import or I want to start exporting. So these authorizations, permission to start import export, is also given by DGFT only. Grant import export code. What is import export code? See, understand. If you want to get registered on GST portal, file your GST returns, take credits and everything, you need to get GST number. Similarly, to obtain the benefits of import export, to go on the portal, to go on the IceGate portal, take refunds, do things on the portal, you need to have import export code. So only the person who has import export code is basically the person authorized to start import or export. So if we learn something about import and export, point number 1 says that you cannot do import export only without IEC code. So you will have to apply to DGFT. DGFT will give you a 10-character alphanumeric code. Alphanumeric means combination of alphabets and numbers. So a 10-character alphanumeric code is granted to you as your IEC code, which is basically your authorization to start import and export and get all the benefits and make all the payments that you are liable for. Now, before 1st July 2017, whenever you apply to DGFT, DGFT would give you a code which would be called as IEC code. But now after 1st July 2017, if you apply also, no, then also your PAN number is always given to you as your IEC code. Now, there's a difference, understand. Today, I have a PAN number, right? But my PAN number is not automatically IEC code. If I go apply to DGFT, everything is okay and they give me IEC code, that will always be my PAN number only, because now it is after 1st July 2017. You have to understand the difference. Students normally think that if I have PAN, that is IEC code only. No. Having a PAN is not IEC code. You go apply and they give you IEC code, that is going to be your PAN number only. And IEC once allotted to you always remains permanent, of course, unless either you apply or you do something because of which DGFT cancels your IEC code. So this IEC code is also granted by the Directorate General of Foreign Trade only. Monitoring export obligation. What is export obligation, ma'am? See, you get a lot of benefits for exporting. Like in GST, we have seen you get refunds, you get some duty drawbacks, you get remissions, you get a lot of benefits, incentives from government if you export. But who will monitor whether you have actually exported or not? Whether you have actually exported within the given time or not? Whether you have actually exported for the amount you were told to export or not? So these are all your obligations that if you want to earn the benefits that government is giving to you, you will have to first fulfill your obligation of export. You will have to export within given time for the given amount, etc., etc. So all these obligations, whether met or not, are also monitored by the Directorate General of Foreign Trade only. And if at all there is any difficulty in interpreting the guidelines, the provisions of FTP, in that case DGFT only comes up with orders to bring clarity, to bring explanation with respect to FTP. So issue orders with respect to interpretation of foreign trade policy. So these are the roles of DGFT. Who is DGFT? Directorate General of Foreign Trade. Ma'am, as you said that the policy is issued by central government, it is formulated by DGFT, and DGFT has various roles to play. Are there also any other authorities who are also concerned with FTP? Yes, of course, because forex is involved, foreign currency is involved, of course RBI will be involved. Yes, indirect taxes are involved. Therefore, CBIC, Ministry of Finance will be involved. Then the state GST departments will be involved. So it is not that just DGFT is involved in it. We also have other authorities who have their own share in foreign trade policy. Now see, import and export of goods can be broadly categorized as. Now import and export of anything could be either free or restricted or prohibited. Now see, understand, unless otherwise mentioned, import export is always free only. Example, ma'am, let us say I want to export this pen, I want to import this calculator. It is free only, no problem. If I have IAC code, I can export pen, I can import calculator. Who is stopping me? So we are saying that unless regulated, for particular categories of goods it is regulated or prohibited. Otherwise than that, normally for any goods, import and exports are free only. So we say unless regulated. Now there could be certain items which are exclusively reserved for state trading enterprises only. Like we can take example of oil. Right. So ONGC, Food Corporation of India, these are state trading enterprises. These are state trading enterprises. So here we say that some particular types of goods, some particular types of items are restricted, are reserved, that they will be imported, exported exclusively by such state trading enterprises. So this could also be a possibility. Then certain import export could be restricted. Restricted means it is okay, you can import or export these goods, but not without permission. Even if you have IEC code and you want to import or export certain goods, you will have to take permission from government. So these things are restricted. Let us say you have a best friend. And whenever you want to go at her place, your parents are ekdam free, completely free. Like even if you do not ask your parents that mummy, I am going, let's say my best friend, I have Himani. Okay, Himani is my best friend. So let us say I want to go at Himani's place. My parents will never stop me. I can anytime go at her place. So that is free. Okay. Now there are some other friends whom my parents know. I know it is not a problem. If I ask them, they will send me. But I cannot go without asking. So what I will do? I will have to first ask and then go at their place. Now that comes in the category of restricted. But some people are completely prohibited only, that I cannot go or I cannot call them at my place. So that is prohibition. So understand, normally we say that all import exports are free only. All import exports are free only unless they are regulated. Now under regulation, what can come? Under regulated, either they could be restricted, prohibited, or they could be exclusively reserved for state trading enterprises. Bolo, makes sense to everyone? Say yes or no. After every concept, it is a custom that you will drop heart, heart, fire, fire, bomb, bomb, dil, dil, aag, aag, bomb, bomb emojis in the comment section. so that I know that you have understood everything. Got it, ma'am. So now, if you want to import or export restricted goods, see, importing, exporting prohibited goods is not in question only. I know if I ask even my father or mother that I want to go at his or her place, I'll simply get a slap only, right? So that is the prohibited only. So no need to discuss further. But if I want to go at restricted places, in that case, what I will have to do? I will have to take permission. I will have to take authorization. Also understand, authorization is not your right, which means if I ask, they have all the opportunity, they have all the right to tell me no. I cannot say that I asked you no, now you have to allow me. I cannot say this, if I ask you, you have to allow me, no. They can say me no anytime, which means authorization is not my right. If DGFT feels he can anytime refuse to grant me or to refuse to grant or renew my permission to import or export certain things. So authorization is not your right. You can always go ahead and ask, and DGFT can always deny you to give the permission or authorization. Then contract may be in INR or it may be in forex, but realization always has to be in forex only. See, only Vostro account, realizing INR through Vostro account is allowed. We have studied about Vostro account in GST also. What are these Vostro accounts? It is basically, let us say, India and Russia wants to undertake transactions, but now Russia is not comfortable dealing in rupee. We are not comfortable trading in Russian rubles. So what we agree, they have their account here, we have our account here, and these people will deposit money here, these people will deposit money here, and basically what will happen is, we will deposit INR only here, they will deposit Russian rubles only here, and these people will get rubles, we will get INR. Basically what happens is, we have an account there, they have an account here, and it is all set off against what is receivable and what is payable. So whenever you get amount through Vostro account in INR, that is okay, considered as forex only. Otherwise than that, to avail benefits of foreign trade policy, your contract could be in any currency, but what you are receiving should be a foreign currency only. Say yes or no, everyone. Done. Chalo. Then we talk about duty exemption and duty remission schemes. Hey, hi, Rahul sir is here in the comment section with us. Rahul sir teaches direct taxes at CA final level. Do check out his channel. He's a great professor. You will definitely enjoy his content. Chalo. Duty exemption and duty remission scheme. Now, first of all, what is the difference between exemption and remission? Exemption means I never have to pay only. It is completely exempt. So, we will see this advance authorization, etc., which is exemption only, that no need to pay duty only. But duty drawback can be an example of remission. What is remission? Once I pay, then government gives it back to me. That is remission. Understand the difference between exemption and remission. Exemption means I am not required to pay only, I am exempt. But remission means first I pay the duty initially, and if all my obligations are set off, government will also remit the duty back to me. That is remission. So we have in foreign trade policy various schemes relating to export where you get your duty back or you are not required to pay your duty at all. So duty exemption and duty remission scheme. We first start with advance authorization. I can say a lot of probability that question is being asked from these schemes that we are studying right now. Whatever we studied till here was okay, like read once category kind of thing, might be asked in MCQ type portion. But these duty exemption remission schemes that we are studying, we have almost 4-5 schemes only, and I request you to thoroughly read all the schemes once, twice, thrice at least, so that you know the concept and high chances question being asked from this particular area. Chalo. So first of all, advance authorization. Receiving authorization in advance. Advance authorization means receiving authorization in advance only, which means before exporting, I will apply to government. Let us say I want to export this calculator. Now we will take example of this calculator and finish up the entire entire scheme. So let us say I want to export this calculator. Now to make this calculator, I need plastic, I need some chip, I need some metal, etc., etc. Now I wanted to import these items. I wanted to import these items so that I can manufacture my calculator and I can export my calculator. Under advance authorization, let us say I got an order for 500 calculators. What I can do is, I can go to government, tell government that see, I am going to export 500 calculators. You give me an advance authorization that whatever things I am importing, you will not take any import duty from me. You will not take any import duty from me. You will allow me to import the inputs that I am going to use in manufacturing of something which I am going to export ultimately. So no duty at the time of import you will levy from me. This is known as advance authorization. So this is a scheme to import inputs. Now understand, this is only a scheme for inputs and not a scheme for capital goods. If I want to import a machine which will be used for manufacture of calculator, then we have a separate scheme named as export promotion capital goods scheme. So here EPCG is a separate scheme for capital goods. As of now, what we are studying is only for inputs, the raw materials, inputs, consumables, spare parts, etc. that you are going to import to make this goods that you are going to ultimately export. So no capital goods covered here, only inputs are covered here. So this is a scheme to import inputs used in manufacturing of export goods without payment of duty. I am taking authorization in advance that whatever I import, I will not pay any import duty. Okay, so you will have to make an application online, obtain authorization which remains valid up to 12 months from the date of issue or specified period, whichever is more. So let us say I apply today to government that I want advance authorization. I want advance authorization. I got advance authorization today. So within 12 months from here or any other specified period that government tells us, whichever is more, which can be extended also one more time for a further period of 12 months. Within this duration, I will have to import the goods that I want to use for my export goods. So the day on which I receive my advance authorization, from this date, within 12 months or the specified period, whichever is more, I will have to import the inputs. In that situation, I can import the inputs without paying any import duty. What all things I can import? You can import inputs, of course, whatever you are going to use. Other some consumables like fuel, oil, catalyst or any other spare material. See, understand, not the inputs. I wanted some extra spare materials. Some extra spare materials are also allowed to be imported duty free under advance authorization, but maximum 10% of CIF of the advance authorization. So whatever inputs, consumables, etc. you are importing, maximum 10% of it you can also import as spare materials. Now using this, I will manufacture something and ultimately I am going to export these things. Then I get the benefit of advance authorization. Export could be actual physical export. Export can also be deemed export. Ma'am, what is deemed export? Deemed export is, let us say you are supplying to 100% export oriented units. You are supplying to some another person who is holding advance authorization. In all of these cases, I am not exporting directly, but I am supplying to a person who is ultimately going to export it. Then such deemed exports are also covered here. We are also going to in this chapter only study about deemed export. See, these are all the categories of deemed exports. If you are supplying to EOUs, STPs, EHTPs, BTPs or to supply under advance authorization, DFIA, EPCG, supplying to some mega power projects, nuclear projects, or let us say goods are not leaving. Basically in deemed export, goods are not leaving India. You are not receiving forex, you are receiving INR only. Forex can also be received, but INR is also permitted here because the goods are not going outside India. You are giving these goods to some person who is ultimately going to export these goods. Then this deemed export is also covered here. So if I am not exporting directly under advance authorization, but I am giving to a person who is going to export, which means a deemed export, both the cases I get benefit of advance authorization. But you need to understand that advance authorization is not transferable. It has an actual user condition attached to it, which means if I apply and government gives me advance authorization to import materials that can be used for manufacturing of calculators, I can only import those materials duty free. Let us say I change my mood to not export the 500 calculators. I cannot transfer this authorization to some another person who is willing to import the raw materials which will be used for calculator. Only I, the person who obtained the advance authorization, can only avail the benefit of advance authorization. So it has an actual user condition. You cannot transfer the benefit of advance authorization to someone else. Ma'am, how will government decide this CIF quantity, that how much inputs they can allow me duty free? So we have something named as SION. SION means standard input output norms. Let us say I want to export 1000 shirts. I want to export 1000 shirts, men shirts, adult men shirts. Now normally to make one adult men's shirt, let us say 2 or 2.5 meter cloth would be enough. So if I want to manufacture 1000 shirts, multiply by 1000, let us say some normal scrap we can add, etc, etc. So this is the standard quantity. This is the standard input required if I want to make an output of good 1000 shirts. So similarly, like we have this SION, standard input output norm for shirt, we can have input output norm for calculator also, that a normal calculator would weigh somewhere around 100 grams. Let us take an example. So which means I will require somewhere, adjusted for normal scrap, let us say 110 grams of plastic. I will need this chip. So for 500 calculators, 500 chips, or let us say you need some more for some normal wastage, etc. So this is how you calculate the standard input output. Now government has issued SION norms for most of the goods. So based on SION, standard input output norms, which is already issued by government, they give you authorization to import your inputs. But let us say I am manufacturing some unique kind of goods for which SION is not available. Then what to do? No problem, you can apply to your regional authority of DGFT. As I said, head office is at Delhi, but of course in whichever region you are, there will also be a regional office of DGFT. You can go apply there, explain what actually you are trying to manufacture and what could be the standard inputs that you will require. So in that case, they will now fix your SION according to your application. So normally SION for all the major types of goods are available only. But if whatever you are trying to export, SION is not available, then the quantity, which is the input output ratio, shall be determined by the regional authority of DGFT. And according to these SION norms, what they can do is they can allow you to import the inputs duty free, which you are going to use for your ultimate export products. Got it, ma'am? See, it is not like for every export order I will have to take a separate advance authorization. If whatever goods I am dealing in, SION is available, what I can simply do is 300% of FOB value of preceding financial year. Whatever I exported in preceding financial year, 300% of the same, or 1 crore, whichever is higher, I can get an annual advance authorization that for the entire year I am open to import inputs for this amount without paying any duty. So whatever FOB value I exported preceding financial year, 3 times of the same, 300%, this is maximum they can give me annual advance authorization. They can also give me less than this. This is maximum that they can blanketly give me annual advance authorization. But if I am dealing into goods, and this can, or 1 crore, whichever is higher we are saying. So even if this amount comes less than 1 crore, at least 1 crore annual advance authorization they can give you. But whatever goods I am dealing in, SION is not available, then annual requirement facility is not available. In that situation, every time for each and every order, you will have to take a separate advance authorization. This annual advance authorization facility only available if SION is available for the goods that you are dealing into. Export experience of minimum 2 years. This is a catch here. This is a good point here that can come in MCQ. See, understand, if you are applying for advance authorization today, you should be an experience holder. If you are exporting for the first time, you cannot take benefit of advance authorization. Then ma'am, what benefit will be available to people exporting for the first time? We have a separate scheme named DFIA, duty free import authorization for them. But the people who have at least 2 years experience, who have been exporting since past 2 years, they can now go to government, show their track record. No, that see, it's been 2 years, we're already exporting things. Now for whatever exports we are going to do in future, whatever imports we require, please allow us. Please allow us those imports duty free. Now understand. Then ma'am, what will a person do for the first 2 years? There are other options available. We have duty drawbacks that once you pay the duty, then you can get refund of the same. That is a remission scheme. This we are studying is an exemption scheme. Duty drawback earlier was there in your customs syllabus. If you had appeared anytime till November 2023 examinations, duty drawback was there. From May 24 when new syllabus came, ICI deleted the duty drawback chapter only from your syllabus, and therefore you will not find duty drawback provisions in your handwritten notes. However, it was earlier there in your syllabus, which means once whenever I am importing, no, I pay the duty, and later on after if I export within the given period, I can get refund of whatever import duties I had paid. So we have duty drawback option available, we have DFIA option available. Do not worry about that. But if you have at least a 2 years experience in export, no, then you can simply go for advance authorization, where you do not have to pay any duty while you are importing the inputs to be used for exported goods. But you need to have at least an export experience of 2 years. Export obligation period means the day on which you import the inputs. Now in ICAI module, I don't know why when they came up with the new syllabus module, they wrote 90 days obligation. It is actually 18 months. In reality, the export obligation for advance authorization is 18 months only. It is today also 18 months, and in the old module of ICI, it is 18 months only. In the new syllabus module, either they have made this mistake or what, I don't know, because in module it is 90 days, I have also written 90 days, but it is actually 18 months. You can practically also think, no, if I import the inputs today, it is not possible just in 90 days, just in 3 months basically, to manufacture, to export and finish off my obligation. 18 months still makes sense. In reality, it is 18 months only. If you want to write, you can mention here why you have written 90 days, ma'am, because in module 90 days is given. But in old module, it was 18 months, and practically in actual FTP, it is 18 months only. So what we are saying is, today when you get advance authorization, from your within 12 months or specified period whichever is higher, you will have to import your inputs. The day on which you import your inputs, from your within 18 months, we say you have to export, manufacture, export and finish off your obligation. But ma'am, what if we are not exporting within this period? Then they will take your advance authorization back. Then you will have to give them all the duties back again along with interest, etc., which is not there in your syllabus. So what we know currently is, the day on which I get advance authorization, within 12 months from here, I will import. The day on which I import, within 18 months from there, I am going to export, finish off my obligation, and everything is okay. We also have a minimum value addition criteria, which is of 15%. That if my inputs are for 100, my FOB value of export should be at least 105. So we are saying FOB value for export 115 minus CIF value of import 100 upon CIF value of import, which is 100. Now this comes to 15%. So the value addition, as we said, no, the aim of foreign trade policy is to make favorable positive balance of payment, which means if you are paying 100, for import, you at least earn 115 for export, then only we will give you the advance authorization benefit. So whatever is your import CIF value, at least you need to add 15% to it and then come up to your FOB value of export. Say yes or no. Here we complete the entire provision of advance authorization. Are you all with me? Clear, understood and done? Tell me. To summarize everything, first of all, you should have at least 2 years of experience. You will have to apply. The day on which you get advance authorization, you import within 12 months or specified period plus 12-month extension possible from there. The day on which you import, within 18 months from there, you will have to finish up your export obligation. No requirement to pay any duty on any inputs, consumables, whatever you need. Also 10% spare parts also you can import, or 10% of the CIF value for which you got the advance authorization. Physical export also allowed, deemed export also allowed, and very important that this is not transferable. This is not transferable. You have an actual user condition. No need to pay any import duty, basic custom duty or any additional duty like safeguard duties we study, anti-dumping duties we study, or in fact GST or compensation says nothing you are required to pay. All the types of duties. This was also a question being asked in examination once, that which duties are exempt under advance authorization. All duties, basic custom duty, any additional duty that you know, safeguard duty, anti-dumping duty, IGST says everything is exempt only under advance authorization. Based on SION standard input output norms, they give you the authorization to import duty free, and at least 15% minimum is the value addition criteria. Say yes, everyone got it? Done, ma'am. Now moving on to duty free import authorization, DFIA. Now this is for newbies. Newbie means who are not having any let us say who are not having any experience. For these people, DFIA can be beneficial, because for advance authorization they've given this condition, no, that you should have at least 2 years experience, then you can go for advance authorization. Now what happens in DFIA, duty free import authorization? Once you will have to export and show it to government. So what I will do? I will manufacture 500 calculators. I will import things. I will pay import duties. Whatever is required to be done, I will do everything. I will manufacture 500 calculators. I will export them and then I will show it to government. Let's see, government, I made 500 calculators and I have already exported these 500 calculators. Basically, government is not trusting me as the government trusts the advance authorization holders. So once I show government that I have exported 500 calculators, now government will tell me that okay, whatever inputs you used in manufacturing these calculators while exporting, now we give you DFIA for the same. Which means for my next import, I can use this DFIA. For my next import, I can use these duty scripts and my basic custom duty against the payment of this basic custom duty, not other duties. Under DFIA, the other duties are payable, like the safeguard duty, anti-dumping duty, they are all payable. Only BCD is exempt, while in advance authorization, all the types of duties are exempt. That is one difference here. Now what happens is, first you will have to export, show it to government, and then whatever you has used as your inputs to manufacture those exported goods while importing them, now government will give you scripts. Now government will give you duty free import authorization, that for your next import what you can do is use these scripts and get your basic custom duty exempted. But ma'am, what if I am not planning of any further import after this? Then no problem, there is no actual user condition. You can also transfer your DFIA right to someone else. You can sell the DFIA right and then that other person can import without paying basic custom duty by using these scripts given under DFIA. Are you understanding the difference? First, I will have to export, show it to government that see I have exported. Then whatever inputs I had imported, no, government will give me DFIA for the same, which I can use for my next import. Because of course, if I am dealing in calculators only, it's my business, then the cycle of import, export, import, export, import, export will always continue. First, one time I will simply pay. That also script I will get. Then I can keep using the scripts, show it to government, and then I can claim benefit. I can claim benefit for the next import whenever I am doing it. Got it. So it is a post-export facility to import inputs used in the manufacture of export goods, and fuel is not allowed under DFIA. So once I export, whatever I had used as inputs in those exports, I can now get DFIA for the same. It is only issued if SION is available. For the goods where SION is not notified, you cannot have DFIA facility. In advance authorization, value addition was at least 15%. Here value addition is at least 20%. Okay. And export shall be completed within 12 months. Now only basic custom duty is exempt, other duties are payable. DFIA is transferable, there is no actual user condition like advance authorization. Because let us say I exported 500 calculators, showed it to government, they gave me DFIA, but I am not planning on any further import. What should I do now? You can sell, you can transfer your DFIA scripts to someone else. Got it. Export shall be completed within 12 months. This export shall be completed within 12 months from filing online application, then DFIA will be issued. So what will happen? I will apply to government. I will apply to government and tell them that see, I am going to make export. See, I am going to make export of 500 calculators. Once I export, you give me DFIA. So the day on which I apply for DFIA, within 12 months from here, I will have to export and show it to government that see, I have exported. If I, after applying within 12 months, export and show it to government, then they will give me DFIA. The day on which they give me DFIA, within 12 months from here, I am open to import the inputs without without paying any duty. Are you understanding the flow here, which is exactly opposite of advance authorization? That you first import, then export, and the time limit also is that ways only. That once you get advance authorization, within 12 months you will import, and after this 18 months you will export. But here, the day on which you apply for DFIA, they will not give you DFIA because first you will have to export and show it to them. So the day on which I apply for DFIA, within 12 months I will export and show it to them. The moment I export, they will give me DFIA. The day on which they give me DFIA, within next 12 months from here, I will have to import, and that import will be allowed to me duty free. Let us say I am not planning to import within next 12 months. I can simply transfer my duty scripts to someone else and they can use the scripts to import without paying basic custom duty. Say yes or no here, we complete the second scheme of the syllabus, which is DFIA. Dil dil aag aag bomb bomb, is it heart heart fire fire bomb bomb emojis? Understood, enjoyed and remembered with me. Say yes. Okay. Now both the schemes, advance authorization as well as DFIA, were for inputs only. Now we move on to a scheme which is for capital goods. If I want to import a machine, let us say, which will be used for manufacturing of export products, then we have export promotion capital goods scheme. EPCG. The name itself suggests everything. Export Promotion Capital Goods. Capital goods which will be used for promoting exports. So, Export Promotion Capital Goods scheme is EPCG. Now, this is a good scheme and a lot of MCQs can be made from this scheme if ICAI wants to. Now, see, understand what happens here. Let us say this person wants to manufacture something for which he needs this machine, right? After whatever this person is manufacturing, he is going to either physically or deemed export it, and that is the export obligation, of course, that you need to fulfill. Okay, but now to manufacture calculators, I need a machine. I have two options available with me. I can either domestically purchase the machine or I can even import the machine. Capital goods can be domestically purchased, they are available in India also, and I can import them also. But if you are importing or purchasing second-hand goods, then you do not get any benefit of EPCG scheme. EPCG scheme benefit is only available for machine that you are using for pre, during or after production scheme. You can import it or purchase it in assembled, semi-knockdown, complete knockdown form, doesn't matter. You can even purchase the machine domestically or you can even purchase the machine import. See, government will be more happy. Let us say the machine that I want to use to manufacture calculators is available in India also. I can import this machine from, let us say, Japan or China or Germany also. Now in that case, government will be happy. No, if government gives me benefits only on imports, if government gives me benefits only if I import the machine, of course, I will prefer to import the machine because my duties will be exempted. But what government says, even if you are not importing the machine, you are domestically from India only purchasing the machine, you will use this machine to manufacture something that you are going to export, then within India also, we will exempt any duty applicable like GST, excise or import duty on imports. Everything will be exempt. Do not worry about the same. In post EPCG scheme, let us say, I imported, I paid all the duties, I made export, and now if I am showing to government, which is post EPCG scheme, duty already paid, no problem, you can get scripts for the same. Pre is also possible, post is also possible here. Like in advance authorization, it is always pre. In DFIA, it is always post. But EPCG, you have both the options. You can either apply earlier also, do not pay duties also only, or you can import, or you can purchase, pay the duties, make export obligation, and then show it to government. That is also fine. Then in that case, they will give you duty scripts, which you can use for your later payments. Got it, ma'am. So second-hand goods are not allowed here. The machine can be used for my pre-production period, during the production period or after production period, which means the machine that I am importing is not manufacturing the calculator, it is inspecting the calculators. After the calculators are manufactured, it is inspecting whether there is no fault, etc. So government cannot say no, that you are not using it to manufacture, it is a post-production. No problem, it is fine. So we are saying the machine can be used at any stage for the production. It can be pre-production, the main during production or post-production machine, everything is fine. You can import the machine in a complete stage, semi-knockdown stage, complete knockdown stage, then get it assembled here. Everything is okay and allowed, absolutely no problem. So we are saying government will be more happy, no, that why are you even importing? Purchase from India, we will give you benefit. Do not pay any GST on purchase of such machines. That is fine. So we say that either the capital goods are purchased domestically or the capital goods are imported. Only there should not be second hand. That is all. All the duties, be it GST, excise import duty, we are going to exempt. Okay. But now, what is the export obligation that I need to fulfill? Physical, deemed export, everything allowed, which is okay. Now we say export obligation. See, understand. We'll take an example so that you get better clarity. I already had 2 machines in my factory. Using these 2 machines, yearly I used to manufacture 1000 calculators and I used to already export them. Now I got a new machine. Now I got a new machine for which I am claiming EPCG benefits. I got EPCG benefits and I saved, let us say, 10 lakh duty. I saved 10 lakh duty on this new machine that I am importing. Now here in this case, government is saying, before import of this machine, you already had 2 machines, right ma'am? You were already making 1000 calculators from these 2 machines and exporting them, correct? So you will have to at least continue that. So we are saying that whatever was your average export for the preceding 3 financial year, you were not having machine in the preceding financial year, the new machine on which you are claiming EPCG benefit, still you were exporting. So if you are not exporting, this comes to 0. So don't worry about that. So we say whatever is your average export, whatever is your average export of 3 preceding financial year, that was anyways happening. That was anyways happening even before you got the new capital good. So you will have to continue the same. Whatever I have written is only for your understanding purpose. Module simply says that your general export obligation is average export of 3 preceding financial year. Why? How? So they are saying that if you are making some exports from 3 preceding financial year, you make an average of the same. Now even with this machine or without this machine, this so you should continue only. Plus there is a special obligation, a specific export obligation on you saying that in addition to this so you have to continue manufacturing and exporting 1000 calculators that you were doing preceding 3 financial years. But now because of this new machine, you saved 10 lakh duties. You saved 10 lakh duty into 60 lakh export, 60 lakh FOB export at least you will have to do within the next 6 years from the year in which you are importing this capital goods. So the day on which you import capital goods, within 6 years from there, if you have saved duty internationally, means if you have saved import duty, then 6%, sorry, not 6%, 6 times of whatever duty you have saved, you will have to export this amount at least. If you have domestically saved duties, which means I did not import the machine, I purchased the machine from India only and I saved 10 lakh GST, let us say, then 10 lakh into 4.5, 40.5 at least I will have to. 4.5 into 10, 45. 4.5 into 10, at least 45 lakh worth of export I will have to do within next 6 years. Say makes sense to everyone. Under EPCG, we are saying you can save your duties or taxes internationally also, you can save it domestically also. If you are saving import duties, then at least 6 times import duties, 6 times the duty that you have saved, you will have to make export. If you are saving GST, excise and domestic duties, then 4.5 times of whatever taxes or duties you have saved, you will have to make an export obligation within 6 years. Okay, understood ma'am. But now see, this is an additional obligation. The average export of preceding 3 financial year to anyway should continue only. So if I was making exporting 1000 calculators, this I will have to continue. Plus this 10 into 6 I will have to do within the next 6 years. Got it. But now we are saying that see, if 75% of the obligation is achieved in half the period, remaining obligation is waived, which means they are giving you 6 years time to do export worth 60 lakh. If in 3 years only, in half the time, you already export 75% of 60 lakh, then remaining 25% obligation is waived off. Even if you do not export it later on, it is fine, no obligation for the same. Government is saying that within half time, if you can satisfy 75% of obligations, they now trust you. Even if you do not do this, it is fine. They will not now keep monitoring you for the remaining 25%. So we are saying whatever was the obligation. If I saved domestic duty, my obligation was 45. If I saved import duty, my obligation was 60. Whatever my obligation was, I was given 6 years time. If in the half time, which means 3 years, I satisfy 75% of my obligation, then the remaining 25% obligation is waived off by the government. They will now not monitor my remaining 25% of the obligation. Got it and understood. This is valid for 24 months for import from the date of issue. If you are today applying and getting EPCG, then within 24 months from here, you will import your machine. After importing, you of course have 6 years time to finish off your export obligation. Drop dil agag bomb emojis in the comment section. Understood and clear. So here we have completed advance authorization, DFIA and EPCG. Say yes or no, everyone. Because under EPCG also scripts can be issued to you which you can transfer. So till now 3 schemes that we have studied, actual user condition was only there in advance authorization, that if you are applying for advance authorization only you can use it. You cannot transfer advance authorization benefit to anyone else, but DFIA EPCG you can still transfer because you get scripts for the same. Okay. Now what is RODTEP? Remission of duties and taxes on export products. Now there is this saying that export the goods, not the taxes. You would have heard this, export the goods, not the taxes, which means we have a globally accepted principle that domestic taxes should not be exported. Why they give you refund of GST? Because they believe if they do not give you refund of GST, ultimately GST will be added to the cost of your goods, which will make your goods expensive and incompatible for the international market. You will not be able to handle the competition. Therefore, they always try to not export any duty. So if at all they have levied any taxes, duties from you, they always give you refund or remission or exemption for the same, so that your export products does not become costly. So we say normally for all there are mostly no export duties for majority of the goods. Import duty also they are giving you all these exemptions and remissions. GST also you get refund for export, but still there could be some other taxes or charges here and there that government is collecting from you, which they are not giving you back. Let us say some electricity, in your electricity bill, water bill, they would be charging some amount as tax, duty or something like that. What to do about that? Because I am not getting any refund or benefit for that. So what happens is they fix a specified percentage. Could be 1, 2, 3, 4, 5, 10%, anything. So granted at the rate of notified at some fixed percentage of FOB. That let us say you export goods worth 15 crore. Then on an average, generally we would assume that to manufacture these goods of 15 crore, you would have used electricity, water, land, etc., for which government charges, let us say, stamp duties or any other wealth taxes, etc. And we are not giving you any refund for the same. No problem. What we will do is flat 1%, 2%, 5%, we will give you RODTEP benefit, which is remission of duties and taxes on export products. So government will fix a particular percentage. That if you export for this FOB, this percentage open script we will give you for RODTEP. So these are issued in the form of transferable duty credit electronic scripts, which of course this can also be used only for the payment of basic custom duty only. So whenever you are importing any further goods, you can simply use the scripts and you can set off these scripts. These are basically like credits only, the credit points that you receive that you can use to pay your next basic custom duty at the time of importing. If you are not planning to import anything further, no problem, you can also transfer these scripts to someone else. This is a hot topic for November 24 examination. Categories of exporters ineligible for RODTEP rebate. There is this change this time here saying that products manufactured by 100% EOU, EHTP, BTP, advance authorization or DFIA holder, earlier they were ineligible, that these people were not given RODTEP benefit because these people anyways enjoy a lot of benefits. Earlier these people were not given RODTEP benefits, they were ineligible for RODTEP benefit. But now this point is striked off from here, which means now they become eligible person for RODTEP benefit. So other than this, these category of people do not get any benefit. They are ineligible for RODTEP rebates. So if you are exporting Export of imported goods in substantially same form. Basically, you're a trader, importing, exporting, not doing any value addition, not involved in any kind of manufacturing process. Then you do not get RODTEP benefits. Or you are doing transshipment. If products subjected to minimum export price or export duty, which means these are the kinds of goods that government is not promoting to export. Therefore, they have applied duty on export. So why they want to give you any further benefit? So no RODTEP benefit on the same. If you are exporting some restricted prohibited items under FTP, for deemed export also, see, to claim RODTEP benefit, you will have to physically export the goods. Deemed export, this is a very good and important point. For deemed export, RODTEP benefit is not given to you. Goods manufactured by DTA supplied to SEZ, same thing only. DTA to SEZ normally we think of it as export only. We give you refund also under GST for supply to SEZ, but RODTEP benefits not given to you. If you are manufacturing these goods in this customs bonded warehouse only, products manufactured exported availing benefit of notification relating to job work, re-export if you are doing exports for which electronic documentation IceGate has not been generated, means basically no electronic documentation is available. In all of these situations, RODTEP benefit will not be given to you. But this point you definitely keep in mind that earlier these people were ineligible to get RODTEP benefit, but now this point from ineligibility is striked off, which means now they have become eligible people to claim the benefit of RODTEP. What is RODTEP? Simply, RODTEP says that major taxes will give you refund benefits anyways, but still there could be some small taxes, duties that anyways you are paying, but we are not able to give you refund for the same, and we do not want it to be added in the cost of your export so that your exports become expensive. Therefore, on a flat percentage of your FOB of export, we will give you a script that you can use to pay your basic custom duty for your next imports, that is RODTEP. But remember, these people who are ineligible to get RODTEP benefits, say yes or no. Here we complete all the schemes that are applicable for your syllabus. These are all duty exemption schemes. Also, there is a small point of duty drawback. Now see, earlier duty drawback entire chapter was there in your syllabus. But now from May 2024 examination, ICAI has removed the duty drawback chapter itself, which means ICAI is not intending to ask you duty drawback. But in your ICAI module, in FTP only, they have given a small paragraph about duty drawback. If you want to not take any chance and refer duty drawback once, I have uploaded a small 15-20 minute revision of duty drawback on YouTube only for CMA students, because for CMA students duty drawback is applicable entire chapter, but for CA students duty drawback is not applicable. So I have simply uploaded a small 10, 15 or 20 minutes revision for duty drawback. If you do not want to take any chance, you can still refer that revision video and complete your DBK duty drawback part. Anyways, because ICAI has not made it now, it has removed it from your syllabus. From May 24 onwards examination, we do not expect a question from it, even if it is given in the module, a small paragraph in your FTP chapter. The entire chapter is removed. So we obviously do not expect a question to come up from that small paragraph given in the FTP chapter. Still, if you want to stay at zero risk, that what if ma'am it appears, no problem, we have a duty drawback revision video in English also, in Hindi also, on YouTube. So you can simply refer that video of 15-20 minutes and relax yourself that even I have completed that portion now. Got it. Now we talk about status holder. Who are these status holder people? These are the business leaders who have excelled in international trade. So government has given some limits, that including your FOB value for current financial year plus preceding 3 financial year. Current year plus preceding 3 financial year, a total of 4 years. If your total export performance is for $3 million US, this is not INR, $3 million US, if in current year plus preceding 3 financial year, a total of this period, if you are exporting for $3 million US, then you are a 1-star category, 1-star house person. If for 2 years, if for current year plus preceding 3 financial year, you have exported for $15 million US, then we will consider you 2-star status category person. $50 million US, 3-star, $200 million US, 4-star, $800 million US, 5-star. So it's easy to remember. Simply what you can think of is 50 into 4, 200, and 200 into 4, 800. This is how you can remember it. And then 3 and 15, you can just remember it. So we say 3, 15, 50, 200, 800. So we say that if you are a business leader who have excelled in international trade and have successfully contributed to the foreign trade, your contribution is very high, that in current year plus preceding 3 financial years, you have exported a total of, this is dollars, so imagine this in INR, 3 million US dollars export you have done. You are a 1-star category person. 1-star export house, we call them 1-star export house, 2-star export house. So this is the status category that they give you. So 3, 15, 500, 200, 800, and these all should be fresh exports. Re-exports are not considered here. So let us say I imported something from a repair, etc., and then I re-exported it, and so all of those re-exports are not considered here. This 3, 15, 50, 200, 800 should be fresh new exports if you are making in current year plus preceding 3 financial year. Then in that case we give you this star category rating. Even if I get this star category rating, ma'am, what are the benefits? Wait for 2 minutes, we will also see that what benefits you get if you become this star category person. Now first of all, ma'am, if I make deemed export, then I do not receive any forex. What to do? How to convert INR? For a lot of deemed exports, we do not actually receive forex. We've seen this. Let us say I supplied 200% EOU, export oriented unit, or a biotechnical park BTP, or hardware technical park EHTP, software technical park STP. If I supply to these people also, then also it is deemed export, and these people might give me INR only. So for deemed exports, it is not always compulsory that I receive forex. Then how to convert it in dollar? So we are saying that for deemed export, the FOR value of exports in Indian rupees shall be converted to US dollars at the exchange rate notified by Central Board of Indirect Taxes and Customs as applicable on 1st April of the each financial year. So for entire FY 24-25, whatever deemed exports I make and I receive amount in INR, on 1st April 2024, whatever was the rupee dollar rate according to CBIC, using that rate, I will convert in dollars and then I will check and add it for my export performance. Got it, ma'am? This is also a good point for MCQ. For calculating export performance of 1-star status house, only 1-star status house we are talking about. Only 1-star status house. There are 3 types of people. MSME units having ISO BIS certification, units located in northeastern states including Jammu Kashmir, Ladakh, Sikkim, and exporter of fruit vegetable shall be granted double weightage, which means, let us say I am an exporter of fruit or vegetable, and in current year plus preceding 3 financial year, I was able to export fruits or vegetables only for, let us say, 1.6 million US dollars. 1.6 million US dollars I was able to export vegetables or fruits in current plus preceding 3 financial year. For the grant of only 1-star status house, for me this will be multiplied by 2, which means they will consider my 1.6 as 3.2, and which 3.2 is more than 3, and I will be granted 1-star status house benefit, which means for these 3 people, MSME having these certifications, northeastern states, and export of fruits and vegetables, because we want to give them the star benefit earlier. Therefore, only for 1-star, if I want to get 2-star recognition, I will actually have to export vegetables or fruits worth actual 15 million US dollars only for the grant of 1-star status house category. Only for the grant of 1-star status house category, whatever I am exporting, being an MSME or fruit vegetable exporter or being in northeastern state, whatever I am exporting, they will consider the amount as double only, so that I can get quick, I can get my star category recognition fast. Which means if I am any of these 3 person, and if I am able to make an export only of 1.5 million US dollars, then also it is fine, because multiply by 2, it will be considered as 3 million US dollars only. But from 2-star onwards, I will actually have to export this amount, and only then I can be promoted from 1-star to 2-star. Only for 1-star, only for these 3 people, their actual export FOB amount is considered as double, so that they can be granted such star category recognition earlier. Say yes or no. Got it. What are the privileges if I get this recognition of, one star, two star status house? What are the benefits that I can enjoy? Authorization on self-declaration basis. A lot of cases, whenever some CA, CFA, CMA certificate required, anything like that required, no permission, it's okay, you can self-declare and authorization will be accepted. Fixation of SION within 60 days. So earlier fixation of SION can be done if your goods, if for your goods no SION is notified. Exemption from compulsory bank guarantees that are required from other normal people. Permission to establish private bonded warehouse, you should be at least 2 or above star category holder. We have studied about private bonded warehouses in a chapter named as warehousing under customs. So we have 3 types of warehouses: public, private and those special warehouses. So here we say that you can now be a person who can establish their private bonded warehouse. And if you remember, there were provisions with respect to manufacturing etc. in your own private warehouse only. So all that can be set up if you are a star category person. Then sample export, they will allow you free of cost up to 2% of average annual realization in the last 3 years. Maximum 1 crore for gems and jewelry. So these are all the benefits, these are all the privileges that you can enjoy if you are a 1 star, 2 star, 3 star, 4 star or 5 star export house category person. What is important is to remember these limits. These limits are many times asked in MCQs. So just remember these limits, that is, and otherwise all the remaining things you can just listen, read once and let go. Okay. Now talking about export oriented units, hardware technical parks, software technical parks, biotechnical parks. So we have import inputs or capital goods without payment of duty. Now these people, because they are set up for the sole purpose of exporting items only, whatever they import, be it inputs, be it capital goods, they are always exempted from payment of any duty. Customs, GST, everything is exempt from there for them. But they should use this inputs and capital goods to manufacture or repair, remake, recondition, re-engineer, render services, development of software, anything that they are doing, it should be related to manufacture, repair, whatever. It should not be pure trading. So a person who is simply importing, exporting, I import mobile, I export mobile, I import mobile, I export mobile, the same mobile. In that case, I cannot be recognized as EOU, VHTP, STP, BTP. I should actually be engaged in some kind of an activity. Manufacturing, repair, remake, recondition, re-engineer, whatever, giving services, everything is acceptable. But pure trading is not acceptable if you are taking benefits of not paying any duties while importing. Okay. Only project having minimum investment of 1 crore in plant and machine shall be considered for establishment of EOU. If you want to become an EOU, you should at least have investment of 1 crore in plant and machinery, which is not for the other people. Now, for EHTP, STP, BTP, even if your investment is less than 1 crore, it is acceptable. Even if for agriculture and handicraft goods you are EOU, then also it is okay. So for EHTP, STP, BTP, agriculture and handicraft EOUs, any investment is okay. But other than agriculture and handicraft EOU, if I want to be recognized as an EOU, if I want to get all the benefits of an EOU, I should at least minimum have invested 1 crore in plant and machinery. Of course, whenever you start your production, within a block of 5 years from there, you should have reached net positive foreign exchange. They are giving you a lot of benefits, no duties to be paid, no GST to be paid, nothing. So in a block of 5 years, if you start your manufacturing today, if you are starting a production today, then you can say that, see, 1 or 2 years, initially I might incur losses, I might need time to come to breakdown, break even, sorry, not breakdown, not breakdown. I might need time to come to break even. Breakdown, ma'am, we are experiencing breakdown only in life. No, but this is break even. So I might need time to recover all the cost and then come to break even. But they are saying it is all fine. But within a block of 5 years, whatever you are paying for imports, more than it should be your export earning. We want a positive net foreign exchange earning from you. And we are not saying, we are not telling you to do this in a period of 1 year or 2 years. We are giving you a full block of 5 years, that for total 5 years, whatever you have received should be made more than whatever you have paid. So we say must have positive net foreign exchange earning calculated cumulatively in a block of 5 years starting from production. So even if these DTA people, normal domestic tariff area people, if we supply something to EOU, HTP, STP, BTP, then also it is considered as deemed export and we also get refund of all the GST paid. Got it. Ma'am, if EOU has any unutilized material, see, we do not charge any duties from them. Why? Because we know whatever they are importing, they are going to simply use it for export products only. But what if even after export and everything, they have some unutilized material? They have three options available with them. Either they can export it back or give it to export it somewhere else outside India, or they can transfer it to another EOU, VHTP, STP, BTP. In that case, it will be considered as an import for that person. So let us say there is this EOU, imported more materials than were required. After finishing off export everything, I was left with these materials. I supplied it to another EOU. It will be considered as import only for this EOU, and this EOU will have to fulfill all obligations to free itself from any duties. Otherwise, this person will be required to pay the duties. Or what you can simply do is pay all the duties, GST and interest, whatever is applicable, pay everything and then dispose it off in the DTA area, of course, because the benefits are only for EOU, EHTP, STP people. If you are not using and selling in India only domestically, then you will have to pay all the duties and taxes applicable. So if at all there are any unused materials, either you sell them to another person, in that case it will be an import for this person, or you can export it to some another country or give it back to your original importer. You can original exporter, you can now export it back, or we say you can dispose it off in the domestic tariff area with intimation to customs authority and plus paying all the duties and taxes applicable. Got it. Deemed export, understood. What is merchant export? So we said export documents shall contain the name of both merchant exporter and original supplier. Now in the chapter of export under GST, import export under GST. So in the GST portion, we have a chapter named import and export under GST. In that we have particularly studied about merchant export, which means if there is a person who knows how to export, but there are a lot of people who know how to manufacture but have no idea about all the documentation and all the procedures that are required to be done for export. What happens is this person is known as a merchant exporter. This merchant exporter collects various goods from these people who are the original manufacturers, and then this person will export everything. So while issuing this export invoice, this person mandatorily is required to mention the name of this original person. Why? Because only then this original person can also claim benefits of export. No, this person is saying, see, I want to export. I am making these goods to export only, but I don't know how to export. Therefore, I am simply giving my goods to this merchant exporter who is going to ultimately export everything. So I should get all the benefits. So here in that case, in order to avail the benefit, the merchant exporter on the invoice, should mention it, his or her name, to of course also the original manufacturer's name whose goods are being exported. Only then everyone can get benefit from the same. If you know, the rate of GST is also very less here. So this provision is already covered in the chapter of export under GST in the syllabus. So export document, be it shipping bill, bill of export, shall contain the name of both merchant exporter as well as the original supplier. The invoice BRC export order may have only the name of merchant exporter, no problem. So on the invoice BRC or export order, if only merchant exporter's name is mentioned, it is fine. But on the shipping bill, I said invoice, sorry, not on invoice, on the shipping bill, on the bill of export, both names should be there. I'm really sorry, I said on invoice both names should be there. No, on invoice or on bank realization certificate or on export order, if only merchant exporter's name is there, that is fine, because ultimately merchant exporter is dealing with the person outside India, which is okay. But in shipping bill or bill of export, which is the document with which government is concerned, there should be name of both the parties, the original exporter also and the name of merchant exporter also. Got it. What is merchant trading? Merchant trading means a person in India is arranging trade between people outside India. So we are saying merchanting trade involves shipment of goods from one foreign country to another foreign country without touching Indian ports. So we are saying a person from USA wants to purchase goods from China. I, being in India, arrange their trade and the Chinese person sends the goods to American person without these goods entering into India. This is known as merchant trading. In this case, earlier the provision said that the goods should go from one country to another country without entering into India. Then you get the benefits of merchant trading. But what if, ma'am, a Chinese person wants to purchase some goods from Chinese person only, but they are not able to crack a deal. They do not know each other. But I sitting in India know both of them and I arrange their transaction. Is it not merchant trade? Because the goods are going from one country to that same country only, but both of them are outside India still. So now this is some change has come in this point, and now government says that okay, even if the shipment is within one specific country, but it should be a foreign country, then also it is merchant trading only. Then also it is merchant trading only. Involving an Indian intermediary is allowed subject to compliance with RBI guidelines. So we are simply saying what is the change here. Earlier merchant trading said that the goods should go from one country to another country without entering into India. But even if the goods are going from one country to that same one country being a foreign country, but the intermediary, the person arranging the trade is an Indian person, then also it is known as merchant trading only. So this particular line was newly added recently. Say yes or no. Got it, ma'am. Then we have a very small 2-3 points and the chapter is over. What was important was still here only. Now small 2-3 points, I need only 10 minutes more to finish off your entire foreign trade policy. So developing district as export hubs. Now see in India, let us say in Gujarat, or let's say in Rajasthan. In Rajasthan, Bandhani saris, Bandhani work is famous. Now, government knows that this particular district, this particular area has an export potential, right? That if we give right infrastructure, right kind of support to this particular place or district, these people can emerge as big export players. Let us say in South, silk saris are very famous. They make super fine silk saris. Let us say Rajasthan, we have Bandhani, Gujarat has its own work. Now in that case, products or services which have export potential in each district are identified, and then government gives them a proper institutional mechanism. A committee is being set up, district export promotion committee is being set up at district level. Then what they do is they identify that okay, what are the goods in which these people are excellent. If we give them support, if we give them proper infrastructure, if we solve their problems, in that case they can emerge as super export players. So what is the work of this committee? This committee will study, they will address the bottlenecks and help the district to develop export potential. Ma'am, what is the meaning of bottleneck? Let us say this is a bottle. Now the bottle is broad, of course, from the body part, but the neck part of the bottle is always narrow, right? So we are saying we have potential here, but this bottleneck, the neck of the bottle is narrow, stopping us to do something. The work of this committee is to identify this bottleneck, that what problem that district people are facing, what is impeding, what is stopping them to develop as big export players. We will identify that bottleneck and help to remove that bottleneck by giving them proper support. So for that they come up with a district export action plan, and 2-3 high potential product services from districts may be prioritized, and accordingly comprehensive plan is being made and the people of that district are supported so that they can grow as export players. Then we have a concept of authorized economic operator. So if you are an entity engaged in import-export, you have IEC code, you are fulfilling all the proper conditions and whatever your supply chain adheres to the proper security standards, then government gives you the status of AEO, which is authorized economic operator. So entity engaged in international trade is granted AEO status if approved by customs, if you are compliant with the proper supply chain security standards. Such entities are considered as trusted trade partners of Indian customs. You get some extensive benefits like you are preferred, you get preferential treatments in customs. Also, we have studied this point of deferred payment, if you remember, that the normal law says whenever you are filing bill of entry, you have to pay the duties. But for people who are frequent importer exporter, for such AO people, we have seen that for whatever you import between 1 to 15 date, you can pay on 16 together. From 16 till last date of the month, you can pay on first of the next month. So these were deferred payment benefits also available. We've studied this in import procedure. If you are not recalling, just open import procedure chapter, you will find this deferred payment point. So all these benefits you can get once you are recognized as an authorized economic operator. Then towns of export excellence, TEE. Difference between this, see, understand. Developing district as export hub says that as of now there are bottlenecks, there is potential. So we can make them grow. They have not grown. We can make them grow, right? They have potential. By getting right support, right infrastructure, they can grow, is this part. But TEE, towns of export excellence are the towns which have already showed they are already contributing handsomely to India's export by producing specific amount that may be granted recognition as TEE. So these people are already producing and exporting and earning handsome foreign exchange for India. So of course it is government's duty to keep providing them targeted support and infrastructure development so that they can maximize their competitiveness. They are already competitive. We want to maximize their competitiveness. They are already value added people, but we want them to move up the value chain. Understand, developing district as export hub, we need to make them understand that they can become export players. These people are already export players. We want them to grow and we do not want them to stop. That is the difference here. Then we have import of items under advance authorization EOU SEZ enabled without compliance to mandatory QCO. What is QCO? QCO is quality control orders. So normally if you import something, if you are importing something, the goods should be compliant with QCO, that is quality control orders. So quality control orders are regulatory mandates issued by government to ensure that whatever products you are importing should meet the specific quality standards. So domestic manufacturers as well as importers, you need to ensure that the products covered by QCO must not be manufactured or imported without compliance with specific standards. So for the products mentioned in QCO, you will have to be compliant with the quality standards mentioned here. But now particularly for these people, advance authorization holder, EOU or SEZ people, because whatever they manufacture, India will not consume it, they are going to export it. So okay, no problem, we don't have any problem even if it is not QCO compliant, because it might not be QCO compliant according to India, it might be QCO compliant according to the country where they are exporting. So we do not have any problem with that. So here now we are saying that now we have enabled the provisions incorporating in FTP that we are exempting these people. We are exempting these people for mandatory QCO, that even without satisfying the quality control standards of QCO, if they want to import or manufacture these things, they are allowed. But then there are conditions that these people, the advance authorization holder, has to satisfy the pre-import condition. Inputs shall be utilized in manufacturing of export product. Normally, allowance for wastage and shall be exported under the same authorization. You cannot transfer the unutilized imports to DTA. Even if something is unutilized, you are ready to pay the duty and then clear into DTA. Then also you will not be allowed because they are not QCO compliant. What if they are not safe for India? So if you are importing something as an advance authorization holder without satisfying the QCO conditions, and if you are left with extra material, then also with payment of duties also, we will not allow you to clear into DTA. You will mandatorily have to use it for export only. Got it? So shall be either destroyed, either you destroy or you re-export. But in India, we will not allow you to clear it. Said exemption shall be specifically endorsed in the advance authorization upon request of authorization holder. Of course, you cannot transfer it. It is given to you only. You will have to only use it after you make a special request. Not for deemed export allowed, only for physical, because again, deemed is in India only. We want these non-QCO things to go out of India. Therefore, of course, not allowed for deemed exports also, not allowed for DFIA scheme, allowed only and only for advance authorization. For EOU SEZ also, you cannot domestically clear, you will have to submit an undertaking at the time of import, and only allowed for physical export. No deemed exports allowed. Got it? And the last part of the chapter is other provisions. Other provisions are very simple. There is nothing to explain in other provision. This is a pure remember category of the portion, that if I want to gift If I want to import a gift, I cannot say that this is a gift, I will not pay any import duty. No, that is not allowed. Only and only if there is some life-saving medicine or Rakhi, not even gifts related to Rakhi. Only Rakhi can be imported as a gift. Otherwise than that, always you will have to pay applicable custom duty, even if it is a gift for you. It is not a gift for government. Government will always, on the assessable value, ask you to pay the duty. Imports are prohibited only. Gifts are prohibited only for import. If I want to export a gift for up to 5 lakh, in a licensing year, you can export something as a gift. Then samples, you can import samples up to 3 lakh duty free. But for vegetable seeds, new drugs, bees and defense items, authorization is required. They will allow you to import sample, but not without permission. See, if I want to import a sample of for calculator, I can import it because up to 3 lakh. Up to 3 lakh, I can import samples, no problem, free. But if I want to import sample of vegetable seed, new drug, bees, defense items, even within the limit of 3 lakh, then also I will have to take authorization. Without permission, I cannot import any sample in India. What if these drugs are threatening to life? What if these seeds can damage the crop or the cultivation in India? So these things can be defense items, of course. These things can be very dangerous. Therefore, we say that even if you want to import sample of these things, no, you will first have to take authorization. For tea, up to 2000 CIF, you can import without authorization. More than 2000 CIF, you will have to take authorization for import of sample also. Export of sample allowed duty free. Of course, it is a kind of business promotion. If person wants to purchase my goods, I will have to send them samples. That's a separate story. So, export of samples is allowed duty free. Removal of scrap or waste from SEZ units, special economic zone units, allowed to be disposed of freely in DTA on payment of duties. You pay duty and then you dispose in DTA. Nobody is stopping you being an SEZ. Right. Ma'am, for second hand goods, it could be capital goods or it could be other than capital goods. See, understand, if you are importing second hand goods, particularly for repair, refurbishing, reconditioning, re-engineering, no problem, you can freely import them. But remaining goods are restricted and can be imported only on the basis of authorization. If I want to import certain second hand goods other than capital goods, and they are for the purpose of repair, refurbishing, you import, repair, re-export, no problem. Other than this, if I want to import capital goods and they are second hand, I will always have to take authorization. They are restricted. But particularly for capital goods, we are saying, particularly capital goods second hand are free. If I want to import any refurbished, reconditioned spares capital goods, that at least 80% residual life exists. So we say that an engineer gives a certificate that even if this machine or this capital goods is a second hand, but still it has 80% life left in it. Or all the other than this list that is given, if there is any other capital goods, we say that these things are free for import. See, it's exactly opposite. For other than capital goods, it is not free. Generally, it is restricted. Only for repair purpose, it is free. But for capital goods, we say that generally it is free if 80% residual life is there, or if it is goods other than this. But these goods, air conditioner, diesel generating set, desktop computer, refurbished spare parts, or personal computer, laptop, all other notified IT goods, you will have to take authorization. So for second hand capital goods, normally it is free if 80% life is there. Otherwise than that, you need authorization. Other than capital goods, normally it is restricted, but only for this purpose, repair purpose, it is free. Also, if there is any used IT asset, anything, laptop, desktop, monitor, printer, and you are importing from SEZ to DTA. See, understand, when you send from DTA to SEZ, government treats it at par with export, gives you all the benefits. So, whenever from SEZ to DTA, you are sending these laptop, desktop, monitor, printer, then for DTA it is kind of import only. And if you are importing these used IT assets, then also they are restricted only. You will have to take authorization. So any second hand air conditioner, diesel generating set, desktop computer, PC, laptop, any electronic items, basically we can say, if you want to import second hand, you will have to take authorization. Other than that, any normal capital goods second hand, you are free to import if engineer gives you a certificate saying that 80% residual life is still there. For these refurbished or reconditioned pairs of capital goods. Normally all the others other than these capital goods that are listed here, your second hand capital goods are free to import only, but other than capital goods are not free to import, they are restricted. What is free to import is only what you are importing for the purpose of repair or refurbishing. Done. And as I told you, you just give me 1.5 hours and I will complete your entire foreign trade policy. If you have listened to this lecture once and you have read it once on your own, 1.5 or 1.75x is the speed in which you will be comfortable to listen this lecture, which means one day prior to exam or on the day of exam, even in the morning you wake up and give only 45 minutes to FTP. Listen to this video along with the notes that are already provided on Telegram channel. You will be all set, all good to go for foreign trade policy to come up in examination, and do not even make this mistake of losing your 5 marks. Chalo. That is all from my side. We will keep meeting for some other sessions on YouTube. If you enjoyed the video, do like, share, subscribe the channel, and after the live stream ends, do drop a comment below the video so that when new students come to refer this video, they are also comfortable and they are also sure about, okay, the content is good and YouTube also recommends our video based on engagement. Chalo, so we'll end here. Do make sure to like, share, subscribe and comment. Take care and bye-bye everyone.